guys, it's your boy Agent Koala back with a quick update. So CPI came with some good news, if that's what you want to call it. Oh, 7.7 down from 8.2. Not that good, but the stock market reacted in the way that it could have either went full force down, the same amount of strength, or it could have went up, and up is what we got. Um, Now, what I'm thinking moving forward is, like I said, we're close to this perfect wave two retrace to kickstart our wave three down to below 300. Right now, we're pressing the top of this rising wedge that was forming that I pointed out in the last video yesterday. And so, what I expect from here is a rejection back to that 383 mark to kind of solidify the boundaries of this wedge. Now, the general rule of wedges is that you get 5 touches, um, 5 complete touches, right? So this would have been our first touch, our second touch, our third touch, still a third touch. This is still a third touch because we didn't get the touch of the top of this on this move up. This kind of double bottomed. And then this is our fourth touch. Now, the fourth touch can also produce a fake out. So it could, very much well reach above this. Grab that 618 retrace at 400, or maybe even grab the 200 EMA on the daily chart, which is at 401, um, and then proceed to nuke, or we just nuke from here. But ultimately, I think that we will get that retest at the bottom of this wedge. And since this is the fifth touch, and generally speaking, wedges usually tend to break on the fifth touch, break out in whatever direction that it's moving. Since this is a rising wedge, we should see a breakdown. And we kickstart our wave three with a massive move down to the downside. Um, just want to touch bases on this descending line of resistance. Um, this is in play, and maybe our fourth touch brings us to that that descending line of resistance, and then we fall back into this wedge and break down to the downside. So those are the two scenarios in play, but overall, guys, nothing is bullish in these scenarios. This is not bullish news. Last time we got a 7.7% CPI, we had a massive drop. So it doesn't really make sense that 7.7 would produce a rally like this, but market makers are going to do what market makers are going to do. The put to call ratio was heavily in favor of the puts, so the best scenario to wipe the puts is to have a 20-point rally. Boom. They don't have to worry about paying out those contracts now. Now what I'm thinking they're gonna do is they're getting bulls excited. Now you already have bulls calling for all-time highs. Bulls going long after a 20-point rally. It doesn't make sense why anybody would go long at this point in time, because the point of time to have gone long was here. And if you were to go long here, it would have just been a hedge, because you wouldn't, like I said, you wouldn't know what CPI would have offered, because it would have gave us a little bit higher than expected, then we would have equally have just crashed down. So the best play would have been was to hedge going into CPI, capitalize on that move to the upside. Now, buying here is not what you're going to want to do, because 20-point rally, you're going to have some kind of pullback. And if you don't, then it's just, then you're just gambling at that point, because you don't know what's going to happen after a 20-point rally. But bulls are bulls, so they're just going to, any green that they see, they're just going to jump on and start calling for all-time highs and these insane price targets like 420, 430. We're not going to see those price targets. Not at this time. There's the state of the economy does not support companies doing well. they're laying off. Their stocks were overinflated. Um, their revenues were overinflated because of high inflation. So once that is realized in this last quarter of this Q4 quarter, it's going to produce what the actual value of the companies are going to be because of this looming recession. So I think we're in a recession and it's just unrealized. But once it's realized, we're gonna see that big drop. And it's the holidays, so people are Americans are going to be strapped for money already. These companies are going to do poorly in this Q4. Like it's just all building up for this one big drop scenario, and that's what I see going forward. So maybe market makers want to push it to this descending line of resistance, but I think too many shorts are going to be up here waiting for that opportunity. They're going to want to make these shorts chase. So like I said, we either get a rejection from here or, we do test that 618 retrace, but I don't think we quite get there. Maybe we get close to that 410, that 410, 408 kind of scenario. But I don't think we get there because it makes too much sense for a good short position, short entry. So they're gonna make people chase the people that are looking for the top. And that's all I got for you guys. Remember to check the link in the description for access to our Discord, my trading course. Um, we have a very big partnership with BingX. We're the official partnerships of the US. We offer $1,300 every single week, so that's over 5 grand a month that you're getting in free cash bonuses, and it more than covers the premium. So get in here, guys. Don't miss out on that opportunity. Y'all have a great day. Agent Koala out.